What's going on, traders? Welcome to the channel. I'm John. That's Groot, currently riding a meme stock roller coaster. And we trade options here. All right, so meme stocks, like we said, are roller coastering hard. AME, no, AMC. All right, so just to give you some idea, I've got some AMC call options. They are losing so much value. They're giving out more cash than the Fed has been printing out, it seems like. So I'm going to dive in, show you that. But I posted a video a few days back that does describe that trade, how I kind of took my risk out of the trade. And that's why I'm able to sort of sit there and stare at a massive, I won't say loss, but I lost the P&L. But my cost basis in the trade is pretty well reduced, and this is a speculative trade. So keep in mind, a couple key things. I'm not an advisor, this is just my own risk, and I'm definitely not giving advice to people. But I think it's important that people see how trading is going instead of just talking about stuff and pumping it and doing all this craziness. Like, no, I want you to see how the trades are going, what's going through my mind at the time. And, if they work out, I basically just trade on probabilities. Sometimes those probabilities don't work out, but you know what I can control? My risk. That's the denominator here. And again, anyone who might be new here, it's a three-part strategy on this channel, right? Okay, so we trade options for income. That is the primary bucket. That's the bread and butter, is we build a weekly, monthly income through trading options. The other part is growing that bucket bigger. So we just reinvest that back in, get more income from the income. And then also there's a growth bucket. So we put some shares, we buy shares in long-term stock that we believe in, let that grow over the long term. And then lastly, we just allocate a really, really tiny amount to a speculative, kind of almost a lottery ticket type bucket. It could go to zero, very high chance it does. And then also, if it does work out though, then that's something that could go bananas and, increase your account multifold. And that's what this AMC trade is. So I recognize the capability that this could go completely zero. And I hope that people who are trading something risky, especially in options, understand that too. If you are not in the money, you have a high chance of losing every single cent in that trade. So keep that in mind. Now, with this setup here, key levels we're watching, actually, as I run back here, is going to be the 43 level and the 3672. So 43 right now, key battleground. It's been tested about 7 or 8 times now, and we just keep dipping above, below, and everyone's watching that. So as we get closer to this void here of this downtrend, we need to break that to either move higher, sideways, or lower. Now, if it goes higher, pretty straightforward. Things are looking great. Gonna figure it out. May just roll out in time or purchase shares. But more importantly, if we go sideways, this is really key. If you're holding on to call options and they're kind of further out of the money or something, no matter what, you're going to be losing value unless we start moving higher. If we go sideways, that can really be damaging to your call options. And this brings me to a good point of explaining something called extrinsic and intrinsic value, especially because I have that in both of these setups, or both these scenarios in my trade. These in the money options, they actually have what's called intrinsic value. There is some value between this 28 strike and the current trading price at $43. 43 to 28, that is the intrinsic value you're staring at here. Like if I exercised these options, I'd only pay $2,800 to own 100 shares. Keep that in mind. That's kind of the intrinsic value that's sitting in these contracts. Same as the 35 strike. There's some value between the two. And then let's talk extrinsic. This is a little bit different. These are out of the money, meaning we are not at $55 a share. We are not at $115 a share. We're only at $42.55 a share currently. And what that's saying is that the only value in these actual options right now, since they are out of the money, is completely extrinsic. If we went to the last day of the contract right now, like if these got to expiration, these would be worth complete zero, nothing. These are just extrinsic values, basically just pump value is the way I'd explain that. If there's time value left and maybe a lot of sentiment or hype behind the stock, then generally speaking, you'll see those call options be higher priced. Or if it's the opposite, less time and very low sentiment, these will be worth almost nothing. So keep that in mind. That's kind of the idea here. And now let's talk about if we're going sideways. If we go sideways, these ones are definitely going to lose value. It's going to be ridiculous. They'll go to zero basically. My plan, if that is the case, is I'm likely to exercise maybe 300 shares. So these 28 strikes, I will probably exercise. I think I'm going to do 300, if not maybe 200. And what I'll do is I'll start selling covered calls against those 100 shares. Not all of them, maybe just like 1 or 2 covered calls, and then I'll leave like 100 or 200 shares available. That way, if the stock starts pumping higher, I'm still participating in that move higher as well. And if not, if we keep going sideways, I'm collecting income on the side as well. So that's really the main plan on sideways or downward movement. If we move down and I start losing value in these contracts, that's the risk I took, right? These could go to zero, and that would really stink. I will look for maybe the possibility of another entry if it makes sense, if I like the action, if I like the sentiment, if I like whatever is going on with regulators and naked shorts and stuff, then I will consider this. But until then, I reserve that right to make whatever move I think is necessary for my account, because I'm controlling my risk. If this goes to zero, I'm okay. I live to trade another day. And that is the only thing I can tell people that you have control over. That's the only thing in the denominator you can control is your risk. So make sure you're playing with money that you are okay losing. Do not ever use money that you are unable to live without, right? If you lost it, can you afford your car payment? Can you afford food? If that is not the case, you should not be trading one bit, okay? The market is always, always there. So keep that in mind. This next one does explain kind of a really key principle to options trading, so you'll want to check that out. Or if you want to understand more of the AMC trade I set up, that is right here for you.